Hey folks, Dan Bird here with the Daily Scan Midday Report for Tuesday, August 26th. It is a little after 11 a.m. It's about 11:10 East Coast time. And we'll take a look at what the market's doing. I think it's pretty much waiting for NVDA, which reports tomorrow night. So nothing much is happening today, really. I've got a couple of things I want to cover, some questions that people have asked. So let's jump into it real quick. First, I'll take a look and see what's going on. I haven't actually looked at this yet this morning. So let's take a look at the 10-minute charts. For subscribers, it's on the charts page right down here. This updates automatically every day. You can see the market's been moving down. Here's the open right here. Here's Monday's open, the blue line. Here's last Monday's open, the red line. So we're below last Monday right now. And open lower, try to climb back up, and now looks sort of like it's falling off again. We shall see. Money flow is down, but starting to increase. So the aggressive sectors are actually looking okay. They're going sideways, but they're up since yesterday, except for communications, that's down a little bit. Industrials looks pretty good. If we look at the defensive sectors, healthcare starting to come back, but staples is down, energy's down, utilities down, materials. So the aggressive sectors are still carrying the market right now. It doesn't look like rotation over into those defensive sectors, at least not yet. We'll see what this looks like Thursday after NVIDIA reports. I'm expecting to see a lot more volatility on Thursday, so it should be interesting to take a look at this. Here's the rotation. Growth versus value. Growth is up slightly. Discretionary versus staples continues to outperform. So that continues to go higher. Technology is a little higher. Semiconductors are higher. Internet's kind of flat. But still, that pretty much validates that the aggressive sectors are in control right now. 10-minute chart for the Russell 2000. It actually is looking better than the S&P. So the Russell is making a comeback. After falling for basically 2 days in a row, it's now starting to come back up. It's right at Monday's open, so actually looks pretty healthy. Large cap, mid cap, and small cap growth versus value are all, so they're starting to move into the growth area. So these are the ones that push it up. So this actually might be a really good time for the Russell 2000. I'll look at this in a different way in a minute. And here's the NASDAQ 100. And on this one, I have the pivot points. And pivot points is what I'm going to cover tonight on Technical Tuesday, because I've had a number of people ask about these. So I'll talk about pivot points tonight. It's just a way to see it. It's computer generated, so it's just based on math. Does not mean the market has to abide by these levels, but many times it does, because just about everybody else is looking at them as well. So here's the pivot for today. This is a 10-minute chart, so it changes every day. If this were a daily chart, it would only change once a month. We'll see that tonight. But right now, the resistance is up here. Actually, let's move this. Yeah, this was Monday's open right there. So I want to leave that there. So here's Monday's open right here. So we're sitting right on Monday's open for the NASDAQ 100. Had a nice run early in the morning, and now it's pulling back a little bit. The advancers versus decliners is the gray line here now. Not too convincing. Certainly higher, but it's above zero, so that's good. But not really convincing. And then up volume versus down volume, also above the zero level, but not by much. So that doesn't really look too convincing. Again, I think the market's just treading water, waiting for the NVIDIA report. Let's take a look over here. If we go to the market bias matrix page and look at the S&P first, and I put the pivot levels on here now. So in this case, this is a daily chart. So you can see now for a daily chart, the pivot levels are based on the whole month. So it sets it in the beginning of the month, and these will stay the same until the next month. So you can see in July, they were a little bit lower. So I'll talk about how these are determined later tonight when I cover this. Notice the S&P is down a little bit, but not by much. It came right up to this first resistance level, and that's where it's basically getting rejected. So these can work. So it's good to at least know where they are. And here's the pivot right down here, basically right about at the 50-day moving average. Don't think it's going to get there, but really probably dependent on NVIDIA. Same thing with NASDAQ 100. Went right up to this first resistance line, pull back to the pivot level. Now it's moving back up again, sitting right on the 21-day. Again, not doing much, just kind of trading water. Same thing with Bitcoin. Bitcoin, I put the pivot levels on here too. So the pivot level for the month is right here. We're below it. So it's sitting right down here at the, actually the first support level is way down here. So it could actually get down to this first support level down here. It's below the cloud, below this support line here that I drew. So this is not looking great, other than it does have a hammer candle today. So that could be a reversal. Could send it back up, but notice the momentum continuing to go down. Well, it should be going down right now because the price has been going down from right here. From this point here, it should be going down. That's what it's doing. But from this point here to this point here, it should have been going up, but it wasn't. It was going down. All right, so that's Bitcoin. And let's take a look at Russell 2000. Same way. There's the Russell sitting right on its second resistance level, almost exactly right there. So it's right now it's an inside day. So it opened a little bit higher than yesterday's closed, and right now it is the close right. If it closed right now, it would be a little bit below yesterday's open. So it's sitting inside of this candle from yesterday. So we'll see. That's not a lot of conviction, but again, I think the whole market is waiting for the NVIDIA report tomorrow. And on that topic, let's take a look at NVIDIA first. Yep, coming back up into earnings like it usually does. Right here, it closed above the 21. That would have been a good entry point. Coming back up now. So it's up a little less than 1% right now. Let's look at it this way. Just a really monster run. This is the trend meter. The trend meter was way up here into strong bullish, came back down into normal bullish, and now it's in weak bullish, but it's not in bearish yet. But trying to move back higher right now. You can see this dash line right here. That's the chandelier exit. I'll talk about that tonight also. So it came right down to that level. That's the point where you could place a stop, or at least put a mental stop if it closes below there. You can see the intraday price went below it, but it never closed below it. So it'll be interesting to see what happens tomorrow when they report. Now, one that someone asked me about was SMCI. This one has been extremely volatile. I don't think Wall Street trusts it yet because they had some accounting issues. You can see it sold off right here. That looks like earnings August the 5th. Yep, there's earnings right there. Has not been able to even come back up to the sell-off from earnings. It's below all of its moving averages. It's trying to come back up, but the red ADX is above the green. That means bears are in control, even still. Well, the only good thing about this is as this continued to go down, volume fell off to almost nothing. So it potentially could be winding up to go higher. Let's look at it this way. You can see down, it's way down here. It's above the 200 still. So that's good. And on the Keltner channels, it's down here at the 2x Keltner. It actually made it down here to almost the 3x. So that usually doesn't stay there long. That's where it will reverse. And here's the reversion to the mean. So I'm expecting that when it gets back to the 21, which is at 46.75 right now, probably will get rejected and head lower again. Again, this is likely all dependent on NVIDIA's earnings. So you can see here, down here, the accumulation distribution is definitely heading down, and money flow is heading down, money flow up here, and momentum, all of this is negative. So this is not the place, unless you want to risk it, if you want to gamble, You potentially could do an entry here and put a stop right down here at about 41. Right now it's at 43.83. If you want to have a little bit more confidence, let it get through the 21 at 46.75. Close above the 21. And then it might have a chance to move higher. But this is going to really depend on NVIDIA as well. All right, one of the questions that came up was, I had talked about in one video, and I think I actually showed an article, but I don't remember where the article is, about 2026 being part of the cycle where the market starts to go down again. John Carter's talked about that as well, but he last couple of times he qualified it and said because of the pandemic and the way it has changed things since the pandemic, both with volume as well as the economy in general, that the 2026 period could get delayed back a year or two. So he's thinking 27 or 28. I'm still thinking 29 is likely, but these are the cycles right here. So those that are subscribers, if you go to the charts page, there's a button right here for better market cycles. And this will show you all of the market cycles. This guy was a farmer way back in the turn of the century, 1800s. And he noticed that there were cycles with crops. And he started to plot out the cycles for good years and bad years. And notice here 2019. So this is the one thing I want to point out with this chart and with cycles in general. Do not anchor yourself to a particular year. That would be a big mistake, I think. It's pretty interesting how closely accurate it is. But if you try to anchor yourself to a particular year, you could either leave a lot of money on the table or could be shorting something way too early. So notice here, 2019, the A are years which panics occur and will occur again. Well, we didn't have a panic in 2019. We had one in 2020. So that was a year later. Pretty close, but not 2019. And then down here, the C level is years of hard times, low prices, good time to buy stocks. This is when stocks should be low. So 2023 was one of those periods. And yes, that was a good time to buy stocks. But it was actually a better time to buy in late 2020 or 2021. So this was off by about a year or so, year and a half. So keep that in mind. It's close, pretty close. So here's the 2026 that everyone's talking about with the cycle. This is years of good times, high prices, time to sell stocks and values of all kinds. 2026, it says. Well, just like I showed you, do not get anchored to a specific date, specific year. This could easily be 2027, 2028, could be 29. And then down here, it says this is the best time to buy stocks. 2032, well, that could end up being 2033 or 2034. So it could be close to there, pretty much in that time frame, but don't anchor yourself to a specific date. And when you hear that all the cycles say 2026 is the year, keep it in mind, make note of it. Don't trade based on that, but keep it in the back of your mind. And also remember that it could be another 2 years from that date before it actually comes to fruition. So that's my comment about cycles. They're interesting to watch. They're not something you should absolutely trade on, but you should keep it in the back of your mind, just letting you know. And that includes, by the way, on my homepage, my secular bull and bear markets right here. Secular bulls typically last 18 to 20 years. This goes back 100 years that this has happened. And secular bears last about 12. Secular bear means if you bought at the top before the bear market and you sold at the end of it 12 years later, you would have made no money. So it never broke out. Even in 2008, when it came, it was roaring back and everybody thought that was it. Well, it wasn't it, because it never broke out. And a lot of people think that 2009 is the bottom, and you could consider that the bottom, but you don't really know until it breaks out again. You don't know until it breaks out of these highs. And that didn't happen until 2013. So if we got 18 to 20 years from 2013, that puts us somewhere in the 2029 to 2033 area. That's why 2029, I think, is intriguing to me, because it's exactly 100-year anniversary of the 1929 crash. When we started into an extended, it was actually more than 12-year bull market. But you can figure out how close we are to this happening again just by looking at this chart. This is a monthly chart, so it moves very slowly. I update it every week. You can see it updated was August 22nd. And right now it's nowhere close to the levels where the secular bull market will end, especially this 200-week moving average right here. Even COVID, although it went below it in the month, it closed back above it. Even the 1987 crash back here never went below it. So keep an eye on this one right here. Here's the 2018 trade war, tariff war back here. 2022 bear market right there. Here's the this year's tariff war, just like 2018. So we're a long way from the secular bull ending, and any pullbacks will be likely short and shallow, and will continue to go higher and make new highs again. So that's my comment on cycles. Another question was a comment I made yesterday about Schwab money market accounts, and the comment that I made was based on Turner Capital, who I have all of his emails right here. Turner Capital actually, it is a financial advisor firm. I think their minimum to get in is 500,000. They might have raised that to $1 million, not quite sure. But they basically have a market timing system that I saw at the Money Show, and I reverse engineered it and created my own, which I have on the portfolios page. And it's been, so far, it's been really good. It's a good one to use for 401ks, just, because you don't have many transactions. You might get one every year. So right now it's long, and it's really based on the weekly. So it's meant to be a long-term strategy. And it went long on May 5th, and it is still long right now in August, up 14%. And if you'd use the triple leverage, you'd be up 43%. One of the comments I made was when Turner goes to cash, when he takes his customers, and he puts his customers all in or all out, and they can decide whether they want the 1x, the 2x, or the 3x. The charts look the same, doesn't matter, and the rules are the same, doesn't matter, but they can decide for themselves which one they want to be in. But he puts them in 100%. So when he gets a signal to go long, they're 100% in the 3x if that's what they chose. This is the TQQ right here. So you can see the 3x right here went long way back here, and it's all the way up here. So let's see, you get 3 times whatever the regular NASDAQ moves. However, when this goes to cash, when it says cash here, what he does is he puts his customers into a Schwab money market account. Now, that's what I mentioned yesterday. I had a number of questions about that. Like, how do you do it? So this right here is, this is Thinkorswim, and here is the symbol. Now there are a number of symbols you could use. So SNVXX is a government. This one's for treasuries. I think this one pays 3.9. I think the government pays 4. This prime right here pays 4.17. So there are a number of different ones that you can use. And that is just basically a symbol, just like any stock symbol, SWVXX. However, if you try to do it in Thinkorswim, which is owned by Schwab, by the way, if you try to buy this in, let's see if it'll let me right up here. Let's try to buy it. Nope. I need SWVXX. There we go. So it's $1. So it's a money market. So every share is worth $1. So if you have $50,000, then that's 50,000 shares. It's $1 for each. But if you try to buy it right here on Thinkorswim, you get a message like this. This is a mutual fund. They are view only on Thinkorswim. Go to Schwab directly to open, replace, or cancel an order. So you would have to go to Schwab directly and then place an order just like you normally would for this particular symbol and for whatever quantity you want. Let's say you have 50,000 in cash that you want it to move somewhere where it's making more than 4% instead of just 0 or less than 1%. So this is the way you do it. You go to Schwab, there's the symbol, you buy however many. If you have $50,000, you buy 50,000 shares. They're $1 each. And you put in a buy order just like you normally would. Now, the thing that's a little bit different is, number one, it will not execute until after the market closed that day. So if I put an order in today on Tuesday, it will just sit there pending until the market closes. And then tomorrow morning, it will show me the execution. So tomorrow morning, I will have 50,000 shares of SWVXX. So that's the first thing to keep in mind. So it takes about a day to move in and out. It's fairly liquid, but there is a 1-day lag time. So if you want to move it back in to start trading stocks again, remember that. You probably need a day to do it. Second thing is, how does it compound? So yeah, it's 4.17%, but how does it compound? Well, it compounds daily. So every day you get that 4.17 annualized, whatever that works out to, divide that by 365. And that's what you would get every day. And the next day it will compound based on your new total, which includes yesterday's interest. So that's pretty cool. What's the payout now of that? So you're not actually going to see anything in your account until they actually have a payout. They pay out once a month, even though it compounds daily, the payout is once a month. And I believe it's around the 15th that the payout occurs. So around the 15th or 16th, when you go to your account, you'll look at it, and instead of $50,000, it's going to say $50,500 or whatever the interest was for those 30 days compounded every single day. So that's the way it works. There are a number of different ones available in Schwab. Just remember, in Schwab, you need to actually go to Schwab.com in order to place the order. So I just did a Copilot AI search for Schwab high yield money market funds. Here's some other ones. So this is the one that I use and what most people use, 4.14% right now. Snacks is 4.29%, but it requires $1 million. Notice this one requires 0 minimum investment. So you could do this with $1,000 if you wanted to. And then there's some other ones, a government money fund. Here's a treasury obligations, 4.16. That requires $1 million. So you can see there are requirements for some of these. So keep that in mind. But this is the one right here, SWVXX, that I like to use. All right. Hopefully that clarified some things for people. Let me know if you have any more questions. A lot of people asked me about that when I mentioned it yesterday. So if you think we're going into a period of like now, September is the worst month of the year, and you don't want to be in the market, you can move it into this kind of fund and at least get 4% compounded daily. And then when the market starts to turn around in late October, you can move all your money back in, including the interest, and use that for trading in October. Excuse me. So anyway, that's the way I do it. That's the way Turner does it. Very simple, easy system, actually. All right, let's go back and take a look at what the market's doing. Let's do it on the 10-minute charts again. Just get a sense for right now. It's 11:30, so this is going to be about 25 minutes, it looks like. S&P really is not doing much still. Again, I think everything's waiting for NVIDIA. You can see the aggressive stocks are still doing pretty well. Aggressive sectors, I should say. There are the defensive sectors. Money flow isn't really doing much. So money flow is still down, actually. So that's not very convincing. There's not a lot of conviction right now. Still below the Monday's open and both this Monday and last Monday's open. And the defensive sectors are still heading lower. rotation, growth versus value, everything pretty much looks the same as I showed it before. IWM also just treading water right at Monday's open right now. Looks like growth versus value still moving up, but might be starting to roll over a little bit. And then finally, the NASDAQ 100 also sitting right on the pivot point and right on almost exactly on Monday's open. So everybody's waiting for NVIDIA. That's going to be what happens tomorrow after the close. Thursday is going to be a really interesting day. All right, thanks for watching. Let me know if you want me to check out anything or if you have any questions. Stay tuned tonight for Technical Tuesday, where I will cover pivot points and the chandelier exit. Thanks, everyone. Hope everyone's doing well, and I will talk to you later.